Welcome back to the deep dive. Today, we're going to be looking at momentum investing.
Oh, interesting.
Yeah, it's all about kind of riding the waves of the market.
Okay.
It's almost like, surfing. You're trying to find that perfect swell, and you're going to ride that wave.
Gotcha.
So we're going to be taking a deep dives into momentum investing using the Union Active Momentum Fund's NFO presentation.
Sounds good.
And, one of the really interesting things that they point out right off the bat is that momentum investing has actually historically outperformed some other investing strategies.
Okay.
And so we're going to touch upon those.
Sure.
But before we get into that, I kind of want to understand the basics here.
Yeah, definitely.
So when we talk about momentum investing, what is that core belief? What are we talking about here?
So the core belief behind momentum investing is that recent stock performance can actually give us clues about future performance.
Oh, interesting.
So it's kind of like tapping into the collective wisdom of the market or even the herd mentality, but that's what momentum investing is all about.
So almost like instead of trying to fight the current, you're trying to ride the current.
Exactly, yeah.
Now, in the presentation, they mentioned some other investment approaches like alpha, value, Nifty 500, low volatility, growth, and quality.
Right.
But before we get into those, let's stick with the momentum.
Sure.
How does this actually work? How do you figure out when to get in, when to get out? Is this just a gut feeling, or is there some science behind it?
Yeah, so it's not just based on gut feeling. Momentum investing is a rule-based strategy that uses mathematical models to identify entry and exit points.
Okay.
So it's about relying on data and algorithms, trying to take out the emotional bias that can often lead to impulsive decisions.
Interesting. So you're taking the emotion out of it and you're letting the numbers guide the way.
Exactly.
Now, they mentioned things like market sentiment, news, company performance. Are those the kind of things that these models are tracking?
Yeah, absolutely.
Okay.
The models are designed to look at huge amounts of data, looking for patterns and signals that suggest a stock is gaining momentum.
Gotcha.
It's almost like a high-tech weather vane.
Yeah.
Constantly gauging the direction of the markets and of the investment winds.
But just like predicting the weather, I imagine there's got to be some uncertainty.
Oh,
right?
for sure, yeah.
How do you account for that?
Yeah, there are risks
Okay.
with momentum investing, entering a position too early, exiting too late, or just completely misinterpreting a trend are all challenges that you need to be aware of.
Right.
It really requires careful analysis and, a willingness to adapt to changing market conditions.
Okay, now in the presentation, they highlight this thing called the Nifty 500 Momentum 50 TRI Index.
Right.
And it seems like this has consistently been one of the top performers when we talk about these factor-based strategies.
Yeah.
So first of all, what does that even mean? What is a factor-based strategy?
So a factor-based strategy is basically targeting specific characteristics that have historically been associated with higher returns.
Okay.
So in the case of the Nifty 500 Momentum 50 TRI Index, it's focusing on those stocks that are exhibiting strong momentum characteristics.
Okay. So it's not just throwing darts at a board.
Yeah.
There's a method behind the selection.
Exactly.
They say, this momentum index has delivered a 19.3% COGR since 2008.
Right.
I don't know about you, but I'm not a financial wizard. So what does that actually mean for the average person?
Right.
How does that compare to other indices?
CGR stands for Compound Annual Growth Rate.
Okay.
So it's basically a measure of how much an investment has grown on average each year over a specific period.
Gotcha.
And so that 19.3% since 2008, let's
Yeah.
put that into perspective. If you invested in the Nifty 500 Momentum 50 TRI in 2008, your investment would have grown 19 times its original value.
Oh, wow.
So that significantly outpaces both the Nifty 50 TRI and the Nifty 500 TRI, which grew 6 and 7 times respectively over the same period.
Wow, that's impressive.
Yeah.
So this really paints a picture of the potential here. Now let's get into this Union Active Momentum Fund,
Okay.
or UAMF as they call it.
Yeah.
They're saying they have this proprietary model that takes momentum investing to the next level.
Right.
So what's so special about their approach? What are they doing that's different?
Yeah. So what's fascinating about their approach is that they've combined this model with active management.
Okay.
So it's not just setting an algorithm loose.
Gotcha.
They have a team of experienced fund managers who are constantly monitoring the markets, they're analyzing trends, and making adjustments to the portfolio as needed.
So they're blending the power of the data with human expertise.
Exactly.
That's interesting.
Yeah.
And they actually have some pretty compelling back-tested data in the presentation.
Right.
They're comparing their UAMF model to both the Nifty 500 Momentum 50 TRI and the Nifty 500 TRI.
Yeah.
And it seems like their model is coming out on top.
It is, yeah, and significantly so.
So break that down for me a little bit. What's really standing out here in this data?
So what's really striking is their 3-year rolling AGR,
Yeah.
which has been positive 97.7% of the time. So essentially that means over any given 3-year period, their model has almost always generated a positive return.
Wow.
Yeah.
Now, before we get too carried away with these stats,
Right.
I have to ask, what are some of the downsides here? What are the potential risks that investors should be aware of when we're talking about the UAMF and momentum investing in general?
Yeah, so as with any investment strategy, there are some inherent risks.
Okay.
And timing is super important in
Right.
momentum investing. And even the most sophisticated models, they can't predict the future with 100% certainty.
Right. So this is not a guaranteed path to riches.
No.
What else should listeners keep in mind?
One key point to remember is that momentum investing, it tends to thrive in bull markets.
Okay.
When the overall market is trending upwards, but during bear markets,
Yeah.
when things are heading south, momentum strategies, they can sometimes underperform.
So it's not a magic bullet.
No.
For all market conditions,
Right.
you need to be aware of those market cycles and how they might impact a momentum-based approach.
Exactly.
Now, you mentioned earlier that momentum investing has historically outperformed other strategies,
Right.
like alpha, value, Nifty 500, low volatility, growth, and quality.
Right.
Can we dig into those a little bit?
Yeah, sure.
I'm curious to understand how they differ from momentum and what makes each of them unique.
Okay, so it's definitely important to understand, the broader investment landscape and how these different strategies approach the market.
Right.
So let's start with alpha.
Okay.
This strategy focuses on generating returns that exceed the market benchmark.
Okay.
But think of it like trying to beat the average,
Gotcha.
not just match it.
Okay.
So alpha investors, they're always searching for those undervalued stocks or, market inefficiencies that can give them an edge.
So they're like the savvy shoppers who are always finding the deals that everyone else misses.
Exactly, yeah.
All right. What about value investing?
Okay, so value investing is all about finding companies that are trading for less than their intrinsic worth. So it's like discovering a hidden gem, that's been overlooked or undervalued by the market.
Yeah.
Value investors, they're looking for companies with strong fundamentals, a solid track record, and potential for future growth.
Okay.
They believe that over time, the market will recognize the true value of these companies, and that will lead to higher returns.
So they're playing the long game.
Right.
Betting that the market will eventually catch up.
Exactly.
Okay, now what about the Nifty 500?
Yeah.
We hear that term thrown around a lot, but I'm not sure everyone understands what it actually represents.
Right. So the Nifty 500, it's a broad market index that tracks the performance of the top 500 companies listed on the National Stock Exchange of India.
Okay.
So investing in the Nifty 500, it's considered a passive approach, essentially mirroring the movements of the overall market.
Gotcha.
It's like investing in a basket of goods that represents, a wide range of the Indian economy.
So it's a way to get exposure to the Indian market as a whole without having to pick individual stocks.
Exactly.
Okay, that makes sense. Now let's talk about low volatility investing.
Okay.
That sounds pretty self-explanatory. Just stick to those stocks that don't, go wildly up and down, right?
Exactly. So low volatility investing aims to minimize risk by focusing on stocks that have historically, exhibited less dramatic price fluctuations.
Okay.
It's like sailing in calmer waters, avoiding those big waves that could come with more volatile investments.
Right. So it's the slow and steady wins the race kind of approach.
Right.
Okay, I could see how that would appeal to some people.
Definitely.
Now, for growth investing, I have a feeling this one is all about finding those companies that are poised for rapid expansion.
You got it.
Am I on the right track?
Yeah, you are. Growth investing targets companies that are expected to increase their earnings at an above-average rate.
Okay.
So think of it like investing in the up-and-coming stars of the business world,
Gotcha.
hoping that they'll become the next big thing.
Okay.
So growth investors are less concerned with the current valuations, and they're more focused on the future potential.
They're betting on those companies that are still in their early stages,
Exactly.
hoping to ride the wave as they take off.
Right.
All right, last but not least, we have quality investing.
Right.
What's the philosophy behind this one?
So quality investing, it seeks out companies with strong fundamentals. So things like solid management, healthy balance sheets, consistent profitability.
Okay.
It's like investing in those well-built houses.
Mm,
Choosing quality construction over flashy facades that might not last.
right.
So quality investors prioritize the long-term sustainability and resilience,
Okay.
believing that companies with strong foundations are better equipped to weather those market storms.
So they're looking for those companies that are built to last,
It's exactly
regardless of, the short-term ups and downs.
right.
Okay, this is really helpful.
Dude.
It's like we've laid out a whole buffet of investment strategies.
Yeah.
Each with its own unique flavor profile.
Right.
But I have to admit, I'm still trying to wrap my head around how this Union Active Momentum Fund fits into all of this.
Right.
They're clearly emphasizing momentum,
Right.
but do they incorporate elements of these other strategies as well?
That's a great question, and it leads us perfectly into the next part of our deep dive.
Okay.
We're going to explore, the nuances of the UAMF's approach,
Okay.
how they aim to mitigate risk, and what makes their strategy stand out in this landscape of investment options.
All right, well, let's take a quick break and then we'll come back and dive into that. Okay, so we're back and ready to really unpack this Union Active Momentum Fund
Right.
and their approach.
Yeah.
We've talked about the potential of momentum investing, but I guess what makes them unique?
Right.
What sets them apart from all the other options out there?
Well, you remember their proprietary momentum model?
Right.
That's one of the things that really sets them apart.
Okay.
It's designed to weed out the noise and really hone in on those stocks that have true potential.
So it's not just about chasing any stock that's on the rise.
Right.
It's about finding those that have the most promising trajectory.
Exactly.
Okay. Now, they also emphasize this active management approach.
Right.
So what does that actually look like in practice?
So they have a team of fund managers who are constantly monitoring the markets,
Okay.
analyzing trends, looking at the economic shifts, and making adjustments to the portfolio.
So they're kind of like navigating a ship through changing waters, making those course corrections to stay on track.
Exactly.
Okay, so it sounds like they're really blending the power of these data-driven models
Yeah,
with that human element of expertise and intuition.
definitely.
And that seems like a pretty compelling combination.
Yeah.
But even with the best strategies,
Right.
there's always going to be risks.
Why, of course.
So what are some potential downsides that investors should be considering when they're looking at the UAMF?
Well, momentum investing can be really sensitive to timing.
Okay.
And those fund managers really need to be good at recognizing when a stock's momentum is peaking
Right.
and when it's time to exit.
Gotcha.
If they miss those signals, the investment could really go south quickly.
Almost like riding a wave.
Yeah.
You got to know when to catch it,
Right.
when to paddle back to shore before it crashes.
Exactly.
Okay. What other factors should investors be thinking about?
Momentum investing tends to do really well in bull markets,
Yep.
where the overall trend is going up.
Yeah.
But in bear markets, when things are kind of heading down,
Yeah.
momentum strategies can sometimes underperform.
So it's not a guaranteed win in every market condition.
Right.
So it's really important to understand how those cycles can impact a momentum-based approach.
Exactly.
Okay, so as we wrap up this deep dive into momentum investing,
Yeah.
what are some key takeaways for our listeners?
Well, I think the biggest takeaway is that momentum investing can be a really powerful tool.
Yeah.
But it's not for everyone.
Right.
It really requires a solid understanding of the risks involved
Yeah.
and a willingness to kind of navigate that market volatility.
So informed decision-making is crucial.
Yes.
And aligning your investment strategy with your risk tolerance and your financial goals.
Absolutely.
Makes sense.
And remember, there's a whole world of investment strategies out there,
Right.
each with its own strengths and weaknesses. We've talked about several today.
Yeah.
Alpha, value, Nifty 500, low volatility, growth, quality.
Right.
The key is to do your research, understand the underlying principles, and choose the path that really best suits you and your individual circumstances.
Awesome. Well, there you have it.
Yeah.
A deep dive into momentum investing
Right.
and the Union Active Momentum Fund.
Exactly. Right.
We've looked at the principles, the potential, and the pitfalls. So, as you continue on your financial journey, I want you to think, could momentum investing play a role in your portfolio?
Good question.
What factors would you weigh before diving in?
Lots to think about.
Keep exploring, keep learning, and we'll see you back here soon for another deep dive into the world of finance.
Sounds great.